2066. That's 800-344-2066.
What
That's
is
my
the
reminder.
Del Walmsley Radio Show?
Welcome to the Del Walmsley Radio Show, where
A waste of time.
the help begins. You need to
Oh, sorry, did I say that out loud?
end it on a paycheck. All of these self-help motivational people, they wind you up like a little clock. Click, 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 and then they'll let you go.
And who is the show about?
I'm your host, Del Walmsley, and as always, we're working on your financial freedom.
The Del Walmsley Radio Show. Weekday mornings at 11 on Business 1110, KTEK, Alvin, Houston.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on
But
the
it
right
should.
path with Right Path Real Estate Radio with Tom Perry and Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guys that will put your fears behind you are on the air now. They're taking calls at 713-785-1817. Toll free 877-881-0271. Here's Tom and Jason.
Hot mics.
Hey, welcome to the show. Right Path Real Estate Radio, 713-785-1817, 713-785-1817. Jason and I, it's Jason and Tom Wednesday. Welcome to the show. So
Yeah, welcome to the show.
Yeah, right. How are you this morning?
Great.
Yeah, good. Drinking your morning cup of Joe?
Yeah.
Yeah.
Enjoyed the traffic from Sugarland. Wednesday is the worst. I don't know what the deal is. Getting over from Sugarland to Energy Corridor is the worst.
Yeah. How long does it take you to get in the morning?
It was over an hour this morning.
Oh, my gosh. That can't be fun.
No. But you know what? That tells me there's economic growth occurring in this market.
Yes.
I shared some numbers with you guys on Monday's show. Tom, I don't expect you to have listened to Monday's show, but
I do listen.
Yeah, I know you do listen, but I mean, we got other stuff going on, right? So let me see if I can find my numbers. I don't have them sitting here in front of me, but in 1997, there were about 47,000 properties that were sold on MLS.
In 97?
In 1997.
Okay.
47,000. In 2007, 10 years later, there were about 89,000 properties sold that year. By the way, those were benchmark years.
Right.
So 1997 to 2007 doubled. In 2017, there were a total of 97,000 properties that were sold on MLS. And when people keep asking me, Jason, where are you getting this idea that these houses are going to keep appreciating? It's real simple. There isn't any more supply.
Right.
We've run out of supply. Whatever comes on the market is just the natural people buying and selling, but there's no new stuff coming on the market, and there's more people coming here every single day.
Yeah, there's no new builders building inside of the loop or inside the beltway like affordable housing.
Yeah, that's all gone.
Yeah, it's all gone. So when people do, but Tom, I know this builder and he builds inside the loop all the time. Yeah, but not.
Yeah, he builds 10 houses.
Yeah, and he builds 10 houses like in a year, and most of them are north of $700,000.
Mm-hmm.
And so there's no like sub 200,000 where they're building like, you know, like a Lennar or a Perry Homes or a David Weekley where they're building sub $200,000 houses.
Yeah, you don't see Pulte coming in here and buying
KB Homes,
100 acres and slapping up $200,000 houses. That's over.
Yeah.
It's over. So you guys that are sitting and waiting on the sidelines, waiting for, quote, the next crash, I'm telling you it's not coming. In fact, I'll even go this far. I was reading an article in Zero Hedge, and I could not believe it because these guys are the biggest bears out there. I mean, every day they think the world's collapsing. And in the comments section, this one guy said, this time really is different. He said it was completely different in 06 and 07. I mean, if you could fog a mirror, you could get a house.
Yeah.
And there was all this new construction, and people were buying. And he said, now that's completely different. It's you have to qualify. You actually have to qualify to get a loan.
Right.
And the houses that are priced right move quick. Meaning, if it's not priced right, it won't move. And
Right.
that's a sign of a healthy market.
Yep.
So people sitting around waiting for, quote, the next crash, it's not coming. Unless Harvey. That's the only... We'll see what happens with Harvey as it relates particularly to Houston. But I just don't see it happening. I just don't. Especially, well, in Texas. Now, if you're in King County in Seattle, if you're in Orange County, LA County, if you're in Cook County, Miami-Dade, if you're in New York, I mean, some of these bigger markets, I mean, that's a whole different animal. But if you're in flyover country, particularly if you're in Texas, I don't see this. And I shared this with him Monday as well. Houston already went through its recession. That's why Houston only grew 7.6% from 2012 to now versus Dallas, which is 12% from 2012 to now. Our prices grew, appreciation grew on average 7.6% per year in the middle of a recession.
Yeah. Yeah, imagine when we come back out of a recession, what it's going to grow.
So the rumor is we came out of a recession somewhere between 4 and 6 months ago.
Right.
Which makes sense because some of the properties we've sold, we were like, we couldn't give this thing away last year.
Right.
And now we're getting multiple offers at above list.
Correct.
So even though things are, quote, in a recession since 2014 in Houston, that's no longer the case. So all of these investors out there, and I use the term investors lightly because they're really not investors. They're that 97% that are really never going to do anything, that are sitting on their hands waiting. You're going to miss one of the
waiting
best
for that
times to build
grand
wealth.
slam home run, right?
Yeah.
I mean, which, we've hit some home runs in some deals that we've done, but never going into the I think of a particular property I bought that we bought off of a $300,000 ARV, and we would have done well on it. We bought it for like 110, we put about 100 into the rehab. It was pretty much a 70% minus repairs kind of deal. A little bit less than 70% because we actually calculate holding costs. So we calculate the cost, don't just use the 70% minus repairs. But that would have just been a good solid base hit. Maybe leg it out to a double, right?
Yeah.
But we ended up hitting a major home run on that because the market shifted a little. Remember what happened is the house across the street got listed for like $399,900, and we're like, that just economically doesn't make sense. And it was on the market for about 2 weeks, I guess. It wasn't a sold comp for us. And then a house across the other street, because ours was kind of like on a corner and a cul-de-sac, had another property got listed for like $389,000 that was like 800 square foot smaller than ours. So when we listed ours, we listed it below both of those at like $375,000 and got that price in about 2 weeks. And when you're buying on a $300,000 ARV and it appreciates up an extra $75,000 that you're not expecting, it's like, wow. Now, do we want to count on that when we're buying? Does that change our buying strategy? Absolutely not. But you can't go in and try and buy a $375 ARV on a $300 ARV and make that deal work, right? But when the market shifts, that's how you get a home run. It's not going in based on lowballing I mean, people say, well, you're just an investor, you just lowball prices. No, when you break it down and show people, hey, these are what it costs to do business, people are like, oh yeah, that makes sense.
Well, you know what's fascinating to me is the flip stuff. When you really look at flipping houses versus holding on to them for buy and hold, you will make much more money on buy and hold. There's a property I shared during the weekend retreat, and we did it this last weekend, and we recorded it and pulled that segment out. At some point, we're going to email that out, or I'm going to, something. I'm going to share it with you guys as an audience. But that house we owned for less than 4 years, and it appreciated so much. If we had held on to it, we would have made $75,000 on a $160,000 house.
You mean we sold it less than 4 years ago? You said we held on to it less than.
Well, if we held on to it,
yeah, right. We would have. Well, in fact, just briefly the numbers on it, because I remember that was one we bought for $65,000. We had about an $8,000 rehab because it really it needed. I mean, if there was ever a house that we bought that was near retail ready, this was the house. It didn't need much work. Yeah. So we put $8,000 into it, and we sold it. I think was it $119,900 something?
Yeah,
like
$119,000.
Yeah, so we sold it for like $119,000, which when you're flipping a house, hey, we're all in for $73,000. We made good money on it, but if we'd have turned around and rented it, I think they were renting for like $1,200, $1,300.
They were renting at that time. They were renting for $1,100. This is only 4 years ago, and now they're renting for $1,470 a month. There's virtually no inventory on the market. And the house went from an ARV of 119 to a little over 160 in 4 years. And people keep telling me, well, Jason, is it just that neighborhood? And I'm like, no, they're not making any more houses like this anymore.
Where do you go get a nice, clean house in a nice, clean neighborhood for 160? You just there's a very finite amount. In fact, even 120. I mean, this was a nice, safe neighborhood for $120,000. And there are lots of neighborhoods that are like that.
So the question I have for our group is, would you invest $20,000 into that deal to make $400 a month cash flow for 4 years and then when you sold it, you made 75 grand. I mean, it's like it, and that's
I don't know, Jason. That's I don't know.
you make almost $5,000 a year in
But
cash
Jason,
flow.
I've got to be out of pocket. I mean, what I'm looking for is a no money out of pocket deal. You would
Yeah,
think.
and you're looking for something for nothing, and
Right.
you're not willing to do the work, and you're not willing to put together a marketing plan. You're
and
not
I'm looking
willing
for
to,
pet unicorns.
yeah.
And rainbows with a pot of gold at the end.
But here's what I can do. I can deliver that house to you that you can then buy with $20,000 out of pocket that will make you 75 grand 4 years from now. We just announced, and it's a very soft opening.
Yeah.
It's very limited. We opened our passive investor network to those who've been to our weekend retreat and those who are in our base camp and one-on-one groups. And we're going to take 10 real estate investors and over the next 60 to 90 days, see how many properties we can get them that are just like this one, where they do none of the work. We do all the work. We find the deal. We get our banker in.
So we're not going to let 100 people in the passive income network.
No, it's 10. And truth be told, I pulled my email up from yesterday. We're probably already full.
Yeah.
But that's what we're going to start doing, guys. We're going to run. We're going to run 2 tracks. One is how to run this like a business, and then the other one is how to be a real estate investor. There's a big difference between a real estate business owner and a real estate investor. And what we've taught since 2016 is how to run real estate as a business. Now we're going to start teaching you guys how to run real estate as an investment. And so we've got somebody on our team that's going to help you build that within RightPath. But to go back to the whole conversation about appreciation in these markets, I was sitting there, I was riding the bike to school with my youngest son, dropping him off, and I was kind of having this internal conversation with myself. You know, what happens if, quote, the market crashes? Because everybody's worried about the market crashing. And we were at the event.
You mean the stock market, not the real estate market?
No,
right?
I'm talking about real estate
Okay.
market. I don't care about the stock market.
All right.
Who cares?
Yeah.
You know what happens if
Because
the stock...
you know Tesla's about to crash, right?
Well, Tesla's really not worth anything to begin with.
Right. Well, it's worth as much as Ford.
Well, here's the deal. Tesla's propped up by subsidies.
Right, absolutely.
We know that for now. In fact, if you actually adjust their earnings for GAAP, the thing is like beyond worthless. So the
Right.
fact that Tesla is, quote, crashing,
Yeah.
it shouldn't be news to anybody. But it's kind of like saying, oh, well, Snapchat isn't worth anything. I'm like, yeah, you're right. They knew that when the IPO came out.
Well, did you see there were some quotes from the hedge fund that's shorting Tesla right now because he basically says there's no reason that they should be out of business in 90 days because they should be filing bankruptcy in 90 days.
Yeah, I don't think that'll happen. But the reality is that all those people that invested in Tesla, just like the same people that invested in Twitter,
Right.
and the same people invested in all these other things, there's no. People need to understand what used to be taught in business schools is not reality. A piece of an asset, an equity asset, is based off the value of the expected future cash flows. And when your company does not create profit, what is it worth? I'll read you guys an article. 97% of stocks are garbage.
Right.
When we get back from the break, we'll talk more about crashing markets. It's Jason Bible, Tom Perry, Right Path Real Estate.
Mike's off.
And another one gone. Another one bites the dust. Hey.
Are you expecting
Hey,
to close accurately
that was a great concert.
on time and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our
Jennifer's
goal
going to try
is
and come
give our
in
borrowers and referral
today?
partners an amazing
Yeah, today. She's going to
experience
come in
during the
today.
loan
She's also going to
process.
try and come back
My
Friday.
team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call
Yeah,
today.
this is
to
all
find
the-
out the simple steps
These are all
to
the
get
people so
started.
far. Probably
I'm
half
Jennifer
are
Hernandez,
Base Camp
the
or
Hernandez
Base Camp
team
Plus.
at Legacy
So
Mutual Mortgage.
we may be we're getting close to 10.
Jennifer.legacymutual.com or call
It's
713-579
terrible.
3611.
But there's no way that would
Again,
work, right? I mean,
No, of course not.
You can't just send out an email.
jennifer.legacymutual.com.
No, of course
we
not.
can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over $24 trillion in investment accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients
Look, guys, I'm just trying to make a few $1 million a month here. If y'all could help me out with that, that'd be great.
That'd be great.
I'm telling you, I keep saying that. It's going to happen.
Right.
Just trying to make a few $1 million a month here.
Educational classes and free consultations with an IRA specialist.
Ride the bike a little bit, do a little camping. That's it.
Camping. He lost me at camping.
Yeah. We're actually, after lunch today, we're going to go look at a RV in Sealy.
Oh, nice.
So, $1 trillion in retirement accounts in the U.S.
A little one, because I do not want a truck can't pull a big one.
Right.
I think I did a really good job in selecting that vehicle. Otherwise,
You'd be having
the budget expands
Yeah,
exponentially when you have a full-size truck.
You'd be having a 60-foot trailer.
Yeah.
Fast Truck Remodeling at 832-742-9990.
A lot of people don't know that a lot of these national parks and state parks, and even on Highway 1, you can't tow a trailer bigger than 27 feet or 30 feet. So there are some of these places you just cannot go.
Yeah.
Like this weekend, we could have, if the RV we're going to go look at, I could have taken it, driven it down to the non-RV area and put it right on the river. But if you had one that was much bigger than that, it just won't fit.
Use a detailed scope of work so that everything gets done. Train and maintain.
Yeah, right on the Blanco.
So it gets done right.
Yeah.
And complete
I mean,
the
we
work
were
in a proper
camping
order
like
so it
on
gets
the
done fast.
river.
No more managing
We're sitting there and we hear this boosh, and we're like, oh, one of the Boy Scouts. What the dumbest one probably jumped in the river, right? They can all swim and stuff, but you're like, what moron? So we look over, and it was an eagle nailed a fish, and he was up in the tree.
Oh, is that right?
Yeah, that was the sploosh.
Oh, wow.
We had wild turkeys. We had wild turkeys flying around. It was crazy.
All right, fellas, we ready?
I think so, yeah.
All right, here we go. Hot mic.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. If you want to call in, ask any kind of questions about finding deals, funding deals, the economy, if you want to talk about real estate in any way, shape, form, or fashion, buy, fix, and flip, buy and hold, wholesaling. Had an interesting conversation yesterday. I know you want to get started. In, so had a guy called yesterday, and this is what happened.
Oh, I knew we were going to talk about this today.
I have to bring it up. It's amazing to me how many people, they get on this, like, man, they put their own plan together, which you only know what you know, right? And so you can't see your own blind spots.
Or what some real estate guru has told you, which is 99% wrong most of the time anyway. So.
Yeah. And it's amazing to me how oftentimes people are trying to get to a point A, and the route that they're taking, the illustration that I gave this guy yesterday is, it sounds like, you love a museum, like world-class museums, and one of the best in the country is allegedly the Smithsonian. You can't see it in a day. It's a couple of buildings. In fact, you probably couldn't see it in a week. I mean,
when I was in D.C. when I was a kid, we went to the Smithsonian. Even when we were there for like a week, and you can't see all the Smithsonian. It's
right. We spent 3 days there and only saw a fraction of it. So I remember seeing the Hope Diamond and stuff. I was like 9, or I was 10, but it's kind of like, if you're gonna go to D.C. from Houston, you kind of head up northeast.
Yeah.
You can either drive there. That's what we did. I don't recommend that. It takes a little while. We had a week vacation. We drove up there, got a chance to see a big part of the country, and then drove back.
It's probably, what, a 2-day drive? Did you stay somewhere in between?
It was 2 days, and then when coming back, we were going to stop in Pensacola,
Yeah.
and but we drove. There was no place to stay, and we kept every place that we went. We drove from Pensacola all the way back in one day. It was long. All the kids slept in the back. But anyhow, so that's the most direct route to go there, right? You go the interstates all the way, or even better, my favorite mode of travel is they've got these new inventions called airplanes, and so fly there. You can get there, but you would never go through Seattle. But Tom, they both have Washington in the name. You don't understand. It's I'm going to Washington to get to Washington. Like no, that's not. I know that and you can configure a way where that makes sense. But most people put together a path for their life that is a very indirect, because they really don't know how to fix the part that's missing to get from here to there. And it's fascinating how you can just sit down with somebody and in 5 or 6 or 7 minutes realize that they make this first assumption that's wrong, right?
Right, yeah.
And then based on that one assumption that they make this entire plan, it's like a domino path that goes all over the place, and you pull out that one thread of falseness, right? You pull, I call it a lie, right? You're telling yourself this lie. And it unravels their entire plan.
Yeah.
And that's one of the things I feel like is our strength, because we've helped so many people, and because we've so many people have gotten, I hate to use the pun, gotten on the right path, but they've gotten on the right path and been able to analyze why it is they're not, what's the gap in their business that's missing, or how to even get started. Most people don't, this guy was stuck in, he didn't really feel like he understood construction numbers. And so he wanted to partner with a guy that owned a construction company, and we have a little bit of experience with that, little bit. That's not the part that's missing. You can learn how to analyze the number and not have to be a construction expert.
My favorite is the guy that sells the multifamily classes and says, well, you got to invest in multifamily to build wealth. But if you can't build wealth with multifamily, then you start in single family. And then we get these people, like there's this faux graduate school of real estate investors out there, and we get these people at our weekend retreat, and I'm like, hey, what are you trying to do? And they go, I want to get into multifamily. I said, no, you're not listening. What are you trying to accomplish? Well, I want $10,000 a month in cash flow. Okay, why? And then we get down to what that is.
Right.
And I'm like, if you just want $10,000 a month in cash flow, you don't have to go buy an apartment.
Yeah.
In fact, I'd argue against it. Just go buy either free and clear 10, 12 single-family rental properties, or buy about 30 of them. It's super easy. That's
about
way
25
easier.
or 30 leveraged, or 10 or 12 that are not leveraged.
Yeah, they're free and clear.
Right.
And I'm like, boom, you're done. It's like the discussion we're having right now in our household is my oldest son. He's 10. He's about to turn 11, and he's got enough in his retirement. He's got enough in his school account. I think he's got $20,000 or $30,000 in there. Or I think we can pick up 2 or 3 sub-2 deals, and now his college is paid for.
Yeah.
I'm like, everyone, they save and scrimp and save, and they work really, really, really hard when they could have just bought a couple of houses and bang, kids' college is paid for.
Yeah.
It's like, it's not that hard. So here's this. Let me go back to, we were talking about market crashes. This is from one of my favorite websites, Dark Bid. This was posted February 25th, 2017, so over a year ago. And I've read this on the radio show before, but I want to share it with you again. In his latest research, finance professor Hendrik, I can't even pronounce his last name, so I'm not even going to try, Besmabender, discovered that 58% of stocks don't even outperform a treasury bill. I'm going to say that again. 58% of stocks don't outperform a treasury bill.
That's more than half.
Yes. The study was based on 26,000 stocks between 1926 and 2015. Meaning just 4% of stocks accounted for all of the $31.8 trillion in gains during this period. That means 96% of stocks were complete garbage. Even worse, shares of unprofitable companies outperform their profitable counterparts, which is why you have a marketplace that is dominated by Twitters and Teslas. I've told you guys this ever since we've been on the radio show. Most of the stuff that's offered by the Wall Street crowd is garbage. It's absolute garbage. In fact, this is my favorite part of the article. Index investing means buying a box of garbage stocks sprinkled with a few hope and glamour stocks whose price gains are solely a result of underperforming fund managers grasping for quarterly bonuses and retail investors juicing up their portfolios in a doomed attempt to catch up on their retirement targets.
Ouch.
That's a drop the mic and walk off. That is the only thing that's propping this market up. And I shared with you guys in Aaron Clary's book, he makes this exact same point. The market is going up because people are trying to catch up with their retirement savings. And when that trend stops, the market will absolutely fall apart. And in another book, Prophecy by Rich Dad Poor Dad, Kiyosaki, he basically says at some point when the healthcare prices rise, and there's a crisis in healthcare, and that is directly predicated based off how old our population is, you're going to see people start pulling their money out of the market to do what?
Pay for healthcare.
Pay for healthcare. Mm-hmm. That is exactly what's going to happen. We already know the numbers. On average, a retiree is going to spend $250,000 to $500,000 in out-of-pocket expenses for healthcare. Where is that money coming from?
Savings.
It's coming out of their retirement account. So here's what I'm telling you guys. This whole stock market nonsense, it's just a ticking time bomb. You wait. Go do your day trading. Go do I'm killing it in Bitcoin, all that other nonsense. That is going to end quickly. And when it does, it's going to happen fast. Now, you can decide to put your retirement into this, or you can buy some single-family houses. That's simple. Here's what I know. I don't need a piece of stock to live, but I need a place to live. I need a place over my head to live. It's that simple.
You don't need a Bitcoin to live, do you?
I don't need a Bitcoin to live. At all. Bitcoin has no utility to it.
I loved Dot Sauer's take on Bitcoin.
Mm-hmm.
Yeah, he said it's just, you know, he documented all the exchanges that have failed, right?
Mm-hmm.
And when you look at it, you wonder, you know, who's behind all of those exchanges that failed, and how do they defraud the public to that extreme time and time again and get away with it?
Yeah, I don't know. Well, and truth be told, is Wall Street really all that different?
Right.
And it's really not. I mean, look at Tesla as a great example. That was a dumpster fire when that IPO came out.
Right.
Look at Twitter. Look at Snapchat. Start looking at all these IPOs. Now, Dropbox came out this week or last week. I can't remember. I get all my weeks confused. But in the last 2 weeks. And I think there's some real value in Dropbox.
Sure, right.
But
because they actually have a subscriber base and they turn a profit.
That's right. And it's a real, there's some real utility there in the digital space, right? So, but when I look at most of this stuff, it's complete and utter garbage.
Yeah. Well, when you compare that Tesla's got the same market cap that Ford does.
Which makes no sense at all.
When you look at that Ford, how much free cash Ford has got for like a rainy day fund, and how many vehicles they produce and the profit they actually generate versus the number of cars that Tesla creates, and they don't cash flow on their cars. They're selling every car at a loss because their operational overhead is higher, and you compare those, and it's crazy.
Yeah, I don't get it. So here's your choice, folks. You can continue to invest in that. You can go through your fund manager. You can do it through an index. You can continue to invest in the Amazons of the world and the Apples of the world and all that other stuff. Or, because the reality is we don't need smartphones when you really get down to it. We really don't need smartphones. We don't need electric cars and all that other stuff. But we do need houses. And here's what I know. We cannot build the houses that are good for rental properties. We cannot build those anymore. It's too expensive to build. And I don't think we're headed for deflation anytime soon. So they're never going to be affordable to build. So if you want to build wealth with real estate, now is the time. I posted a link on my Facebook page a couple of days ago. We haven't even hit the peak. We haven't even matched the peak from the last real estate peak. We get back from the break. We're going to talk more about markets and real estate and what we do for real estate investing. This is Jason Bible, Right Path Real Estate.
Mike's off.
Easy for you to say.
I'm going to say timeout.
Right, timeout. Are you putting us in a timeout?
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. NextGen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans?
This is
Why
interesting.
settle for
I think we need to have
mediocre results? There's a better
we gotta have a
place to
talk
invest.
about this meeting.
The experts agree.
Because I don't
Single-family
think
real estate is one of the best investments
you are
can make.
CC'd on this
Find
email.
out how
I don't
JB
think these
Fund
guys are getting
Services
it.
offers a 9% preferred return
If
and
you
up
want
to
a million people at the
50%
event, we can get them there, but I
Call
don't
us
think
today
you
at
want them.
281
I thought it was an invitation only thing.
0906 or visit our website, jbfundservices.com.
Like I invited that
That's
guy that I spoke to yesterday. Just said, hey,
281-915-0906.
email support and
This investment is offered to accredited investors.
Time is money in a real
can you
estate
forward that to
agent.
me?
If your
You
insurance
already
company
have
is
it.
slow or
Oh.
non-responsive, you could
I thought
lose
you said I
deal
wasn't included on
like
that.
Yeah, it is. You
Need a
are.
quick turnaround on quotes, binders,
Yep.
and the
Your
agency
Houston
that
House
is
Buyers
Benchmark
email.
Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management
We're still a
experts.
couple of days
Benchmark
out. It's like
Insurance Group of Texas. 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
we need to meet sooner rather than later about the private investor network and this other thing that we're working on with Robert and have a conversation with these guys.
Philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com and don't forget to tell us you heard about us at Right Path Real Estate.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Selecting a foundation company and their
There must have been some guru that blew into town, because I kid you not, I've gotten no less than somewhere between 25 and 50 emails, Facebook messages, contacts on our Facebook page for we're looking for people to add to our cash buyers list
Yeah,
and
right.
all this other nonsense.
Yeah.
in today's market. Remember to check before ever repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment
All right,
properties?
30 seconds.
Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
This is Business 1110.
All right, guys, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817, 713-785-1817. So you said that you wanted to talk about something coming out of the break.
Yeah, I mean, just the stuff that you guys are investing in, and I used to invest in the same stuff, right? It's like, well, I'll get into this index fund, and this index fund will diversify. I'll tell you, one of my favorite things is watch Warren Buffett. Warren Buffett is one of those classic people that people listen to what he says, and I'm like, don't listen to what he says. Watch what he does.
Yeah, right.
Watch what he does. Now, he'll occasionally, maybe it's because he's getting a little bit older, he'll occasionally say something that sets the entire financial industry on end. And I'll tll you one of those things that he says is, Diversification is for those who are, oh man, let me pull up the actual quote. It's diversification is for the ignorant. And everyone gets all up in arms whenever he says it. And they're like, well, you didn't really mean that, right? And he's like, well, diversification is protection against ignorance. It makes little sense if you know what you are doing.
Oh, jeez.
And he's right.
Yes.
This is one of those things this is why they don't bring Charlie Munger out. Because Charlie's his right-hand man at Berkshire.
Yeah.
And Charlie is
he's got less filters.
He's got less filters, and he's kind of the typical grumpy old billionaire that he'll just tell you how. Now, I always get the impression Charlie has always told you how it is, right?
Yeah, right.
Like he's always been that guy, but he's not the warm, grandfatherly type like Warren is. So whenever he lets this slip out, and he'll say it every now and then, the financial services industry throws a fit because they're like, well, no, you got to buy this, and then you got to buy this, you got to buy large caps and small caps and blue chips, and you got to do all this other nonsense. And the reality is when you start to look at the numbers, it's not a successful strategy. It's just not. One of my favorite things, and he said this for years, and Dotzauer said it again this past Wednesday. He said, look, investing is two things. It's two elements. It's one part knowing what you invest in.
Right.
And if you don't understand it, don't do it. The second part is cash flow. That's it. And then he goes on to this, his next explanation. He says this. He said, what investment do you know more than the house you live in? And you sit there and you think about it. You go, I don't. I know the neighborhood. You know the schools.
Right.
You know your neighbors. So why don't you invest in the house across the street as a piece of real estate, as a rental property, assuming it cash flows, right? And you have that thought, and you're like, that's brilliant.
But, Jason, I don't want my tenant living across the street from me.
Who cares? Well, your tenant's never going to know you anyway, right?
Right.
You're going to have property care run it, so who cares?
Right.
So that's the reality of this. Do you really understand the accounting going on at Tesla? Do you really understand what's going on there? Do you understand GAAP versus non-GAAP accounting? Do you understand how big the market is for electric cars? What's the regulatory environment for electric cars? What happens if those subsidies in California disappear? What's going to be the impact on your portfolio? So you can research all that, or you can go, I've lived in this neighborhood for a long time, and I'd love to own a couple rental properties here.
But, Jason, you don't understand. I had this uncle, and he had a rental property, and it was just a nightmare for him. He just, I never want to have that kind of nightmare.
Yeah, and I'm sure your uncle made some other really great financial decisions
Right.
too, right? This is kind of like, well, Jason, I got into real estate, and my tenant tore up the house, and that
didn't work out so well for me. So
Yeah.
I certainly don't want to do that again.
Well, get a better tenant.
Yeah, right.
It's like So let me get this straight.
How do you know how to get a better tenant?
So let me get this straight.
Yeah.
You're willing
Yeah.
to take on all the risk to put your money in something like Tesla or in something nonsensical like Bitcoin, but you're not willing to do a better job screening a tenant. Those don't even, the level of risk.
I had a conversation
I
went to Austin on Monday and had
Yeah.
a conversation while I was on the road there, and I've shared this with you already. Another one of my phone calls for the week, and this guy says, I had this tenant, and he really tore the place up, and I'm like, yeah, so you're not a tenant managing real estate. I mean, it doesn't mean that you can't be an investor just because you don't know how to manage real estate properly. I mean, you ever studied how to manage real estate? Ever been to a class on how to manage real estate? Do you know anything at all about, or are you just winging it? Oh, yeah, it's got to be easy. Just, put a sign out there. I mean,
yeah, they'll just sign a lease, and I'll just charge them back for when they destroy the place.
Do you have a process and a system for screening tenants, or did you just take the first guy that says, yeah, I'd like this house, and here's my deposit check?
Yeah.
Yeah, I mean, that's not, it's like, man, hire somebody that's a tenant. You can hire a tenant, property management, for only $85 to $100 a month. I mean, it's just...
Well, you know what I like to do is I like to flip the script on him and ask him, hey, what do you do?
Yeah.
Oh, well, I'm a nurse PA, or I'm an oil and gas. Great. What side of oil and gas? Oh, I'm in upstream. Okay, what are you doing upstream? Well, I manage the accounting and purchase stuff for, let's say, a couple of opcos. Okay, great. So when you're going out and purchasing, right, so they're putting together a contract and they're sending it out to bid, do you just take the first guy that shows up?
Yeah, right.
Do you vet that contractor can actually perform? Do you look at the jobs they've done in the past? Do you look at their insurance? Do you look, oh, yeah, man, we vet these people. We look this and that. We look at their safety records. So why wouldn't you do the same thing with a tenant?
Well, because I don't know how.
Well, and but that's my favorite. And you just don't say a word,
Yeah.
and they go, "Wow, that was." And then what? Most real estate investors.
Why are you being so mean?
I know. Well, that's how it starts, right?
Right.
But
Why are you
most
being so
real
mean?
estate, most real estate investors, when you tell them that,
Yeah.
they go, "Oh my gosh, what I did was really, really, really stupid."
Yes.
And it's not because they're dumb people. It's because they don't take the same business approach that they take at work and apply it to their single family portfolio. I'm like, guys, you're not going to go out and paint your own rig, are you? No, we hire somebody to do that. So why would you go paint your own single family house? Oh, but I'm going to save some money. Yeah, I'm sure Exxon could do the same thing if they painted those rigs themselves.
Yeah, right.
Or if they just paid somebody to do it. I'm always shocked when I go down, what is that, 225 when you go out towards Pasadena, you're headed out east.
Yeah, sure.
And you see all the big
cranes.
All the big oil containers. They
yeah.
paint them all up with the murals and everything.
Sure.
Do you think that's the guys they're getting off their second shift and they go, "Hey boys, I got a couple hours in the tank left in me. So and the wife's got Bible study night. So let's go up here and Let's go up here and paint the side of this here tank." No, they hire somebody to do that.
They might hire actually some tank painters.
Yeah, some guys that have the equipment. They've done it a million
scaffolding,
times.
right.
Yeah.
Mhm.
You imagine that sending some good
the
old boy up
liability
there?
insurance,
Yeah,
yeah.
all that stuff. It's like it's the same thing in real estate. When you really get down to what we're teaching people, we're teaching them a system and a technology. The technology is how do we find the piece of real estate that's most likely to appreciate and make us money? And then we teach, hey guys, here's the system. This is what the system should look like. This is how you vet these people in the system. And then the final step is, oh, by the way, we already have all these people in-house, right? They're radio show sponsors. They're vendors of ours. Just use these people. However, you still need to ask these questions,
Yes,
right?
right.
To make sure that you're getting the right person for the right job.
Yes.
And then when you look at that, and then you compare that to, oh, I'm going to go invest in an index fund that invests in 100 different companies. Do you know anything about those 100 different companies? No, you don't. Do you understand what a contagion is as it relates to equities? No, I don't understand that either. But I just know that if I keep investing in this, it's going to keep going up.
But Jason, you don't understand. I put like $10,000 in my retirement account last year, and now I've got $12,000.
Yeah,
so it's like that's 20%.
Congratulations, you made a 20% return.
Right.
You're going broke slow, and you don't know it.
Right.
You don't.
Well, here's the
know
problem:
it.
is that what caused it to go up 20%? That was one of the things I loved.
Oh, yeah.
That Dotzauer asked about the Bitcoin guys.
Mm-hmm.
Hey, what caused it to go up when it went up? What caused it to go down when it went down? If you can't answer those questions about your investment, then you probably don't know enough about it to be investing in it.
Mm-hmm.
Because you've got to understand that there is a cause and effect in those. And so oftentimes you're right, like with the stock market, it really has to do with more money supply than it has to do with actual valuations. And that's really where we have. We have an oversupply of money in the stock market, and there's not enough stocks to go around. And in fact, if you ever look at what's really, really scary by comparison dollars, if you ever look at what the national debt is versus how many companies you could buy on the S&P for that national debt, and you really realize that there's just not enough things to buy. There's not enough income-producing assets out there to buy for the number of dollars there are to buy things.
Right, and that's when you look at, well, that's one of the reasons why companies don't have to offer a dividend anymore.
Right.
Right, dividend is to attract investment dollars,
Correct.
right, for equity investors. And when they don't provide a dividend, they're literally borrowing your money for nothing, right? They're getting your dollars for nothing.
Right.
And they don't care if they make a profit. I mean, it's like, read the disclosure. It is an eye-opening experience to read the disclosures from Snapchat. I read them on the radio show about a year and a half ago. Read the disclosures. Basically say, we might make money, we might not. We might lose it all tomorrow. We may never make a profit, but, we're going to sell it to you at $20 a share. And they just gobbled that garbage up. And if you look at Tesla, it's the same stuff. It's like, read those disclosures. And if that doesn't scare the stuff, because remember, guys, this isn't your play money.
Yeah.
This is your retirement money. And you only have one shot to get this right. You can't, in the middle of retirement in your 60s and 70s, say, oops, I screwed up. I need to go back to work for 40 years to go save up more money to invest in something so I can retire again. That's not how this is going to work. You're not going to know if you're successful until you're in the middle of it.
So I was having this other conversation, and it was an aha moment for me this past week. And I was talking about there's a particular publicly traded company that is in the real estate brokerage business.
Okay.
And I was talking to somebody that works there, and I was quizzing them about some processes that they have. Like one of the processes they have is they have an agent. Actually, they want to have somebody on spot at the house when the inspector goes in.
Okay.
And I'm like, why? And they said, well, for liability reasons. I'm like, an inspector's they're licensed by Trek. Why would you want to have someone there when Trek is there? Your agent has the same liability that they have. I mean, your employee is as likely to steal as that Trek inspector is.
Yeah.
I mean, so and then you know what hit me is they've put this policy and procedure in place. Number one, the CEO probably has none of his own money invested in other than the options that he was awarded.
Right.
But he didn't, like you and I, we put our own money in this.
Right.
And we're in the business working in it on a day-to-day basis. We know all the moving parts. Not that we've done all of the parts in the business, but we understand every facet. I'm like, oh, that's it. The people making the decisions on why they do this, don't have their personal capital invested in the business, although they do have a significant percentage of their net worth in it. It's not like they created the net worth and then invested that net worth. It was all created through, angel fund investors, all those, not their own money putting. And then they've never ever built it because they're really it's a technology play, right? Not a. And you start putting those pieces together and you realize, oh my God, how many other businesses on the exchange are exactly like that? And you're trusting these people to your better future. And when that fails, I'll talk about on the other side of the break one more that failed. And you're listening to Right Path Real Estate Radio, 713-785-1817.
Microsoft.
What you realize is at that level, the CEOs and those companies, they hop, right? It's from deal to deal to deal, and it's like when it vanishes.
Actually, their risk manager should sit down with them and say, because our agent is there, then we don the liability.
Right.
So we're actually donning more liability because an agent of our company is there.
Right.
They should never be there.
Right. Yeah, because it has. I mean, I'm like, man, I don't know of anybody else that does that. So anyhow, reminds me of when Barbie was in telecom, right? And Greg Maffei had been CFO of Microsoft. And his biggest job at Microsoft was, how do you deploy $1 billion of cash every month? Because they were throwing off.
Apple has the same problem right now.
Yeah, a ton of cash. Well, so then he left. I guess he got bored deploying $1 billion of cash a month. And he became CEO of this company in telecom.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs.
Yeah, Adam, I'll add you to our buyers list for all our New York deals.
Yeah. Yeah, is he looking for 70% New York deals?
Oh, yeah. Hey, Adam, I have a whole list of 65% deals in New York. I'll just shoot them over to you. I was in New Jersey for like 5 hours one day, and I totally picked up 15 properties.
Yeah.
Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Call agency. What is this?
30 seconds. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisal. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
This is Business 1110.
Oh, little Rage Against the Machine.
All right, gentlemen, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Hey, since this is our last segment, I want to promote two events we've got coming up.
Okay.
The first one is we've got a free income and wealth growing business opportunity this Thursday, and that's going to be...
Wait, back up.
Yeah.
Say that again. I got so lost on that one.
Yes.
The Intro to Income and Wealth Workshop,
yeah,
right?
the workshop, right. Sorry. Yeah.
You're like business opportunity or like searching for words there.
My brain is going three different places all simultaneously. It's not working out so well. So, it's a free event is the Intro to Income and Wealth in Real Estate. That's going to be this Thursday. That is from 7 o'clock. Networking starts at 6:30. So networking starts at 6:30. The event's going to go live at 7, and that is free to go to. All you need to do is go to our rightpathrealestate.com website and register for that event. We also have our Pathway to Income and Wealth and Real Estate Workshop, which is April 20th through 22nd. That's where Jason and I are going to talk about how to build wealth and income through buy and hold, how to buy, fix, and flip properties, how to wholesale properties, how to do it the right way, how to really run it like a business. Not how to bake a cake, but how to build a cake-baking business. So there's a big difference, and if you think about that, it'll make a lot of sense. The other thing that some people get stuck with, how do you analyze a deal? How do you walk through a house and not be overwrought with stress about, oh my God, this house is a big piece of you-know-what, and there's no way possible I can see it. Smells bad, it looks bad. I mean, there's no way possible that I can ever, make this look like a nice house again. And so we're going to go on a property bus tour, and there's going to be experts from insurance, from construction, from appraisals, all of those kind of things. You're going to be able to walk the properties with the experts and learn a ton of information. That's going to be Saturday, April 7th.
And you're going to be the special guest, right? You're going to be there walking them through these properties, right?
I know that Fast Track will be there. I know that we'll have a ton of folks. I'm 99% sure that I can be there, but there's a possibility I might have to be in College Station.
Okay.
Yeah.
So we will be there at the bus tour walking you through some properties that we're in the middle of rehabbing, fixing up. And then you also get to meet our new staff member that's helping us build this passive investor network. So if you guys are interested in doing this in a passive form, we'll show you how to do that. So thanks for listening. It's Jason Bible, Tom Perry, Right Path Real Estate. Just go to rightpathrealestate.com and you can see all the events that we host there. And love to see you out at one of them. Thanks for listening.